We're here to empower high-income earners to gain back control of your time through financial independence and stop trading your time for money and start letting your money work harder for you.
And hey, if you want to meet other high-income earners on their FIRE journey, join our High Income Earners FIRE Facebook group. Every month, we'll have guest speakers and we'll share about what our team is currently working on and allow you to share what you are working on with other high-income earners.
Hey, high-income earners. In this episode, we have our guest named Dave Knight. Dave Knight has started investing in single family to student rental to multifamily conversion. And now he's squeezed out because of the new regulation and all the high interest rates. So he's starting to pivot in US. If you're someone who's like him, who's been struggling to find cash flow property and want to find new ways to continue to invest in real estate, you want to listen to this episode. And he also share about what type of tools he uses horn in and narrow down on which specific postal code to invest in the US as well. And here you have it. What's up, Dave? How's it going?
Good, man.
Cool. So tell us why you're considering into investing in US and why you think that based on your strategy, investing in Hamilton, Ontario, Canada no longer works based on your number.
I think it just no longer is as beneficial as it was, 18 months ago. I'm not saying Hamilton doesn't work. It depends on what you're doing, right? There's no one size fits all. The Airbnb in Hamilton is getting squeezed, with restrictions and new bylaws, etc. You definitely need to be at that 4+ mark for units. With interest rates rising, it shrinks all the cash flow. So what do you need? You need more, more units. So I think people are going bigger, or they're putting more down, or which obviously isn't the greatest strategy for me. I want to put less down, to get that ROI higher. But so things are just pivoting, and I think that's what everyone is looking at now, and everyone's going through it. It's just figuring out what direction they're going to go. And for me, I like cash flow, so I'm really like what I see in the US, which is why I'm focusing now there.
Cool. And so just kind of like behind the curtain kind of thing.
Sure.
Is your existing portfolio in Hamilton still cash flowing, or what's your plan on doing of those portfolio and Hamilton?
So I had been focusing on multifamily conversions, but flipping them. So I was not actually holding on and renting. I did at the beginning, and then things started going, I wouldn't say wild, like the last 12 months was a little wild, but, like 3 years ago or so, things were still, pumping. So, I'd be able to probably do a full burn and hold on to it. But at that time, I liked the idea of flipping and putting my money into other places, rather than just kind of narrowing a narrow cash flow. So that was just my model at the time. So I was flipping. So to answer your question, has things narrowed? Yes, because, as the market changed, so did my perspective of what I was going to do. I couldn't necessarily flip for a certain price. So then the idea of burring and holding on to it, but looking at the cash flow, I've still decided to unload some of these properties, even though the state that they're in, whether it be Airbnb or just finishing the projects. And again, like I said, focusing more in the US, just to get a higher ROI, less restrictions, like renting in Ontario, even though I used to do it and never really had a problem. I was very fortunate, but it still scares the hell out of me. So I'm just worried about that one, person that sneaks through my filter of screening process for tenants and, the restrictions that come along with it. And I just like a little more freedom of the Airbnb and the cash flow that the US markets can bring versus Ontario or elsewhere right now.
Yeah, and I can echo you on that. They're just saying in real estate, the more pain you can take and the more cautious you are, the longer in the game, the more money you make, right? And if you're in the real estate game, holding game for long enough, eventually we'll run into a small number of bad tenants. Personally have some good tenants who was up and up for years, and all of a sudden their ex-wife come back at them, and all of a sudden they kind of struggle. And we're going through that one
right now already, and they're great people. They just couldn't pay. So kudos to you on that. Keep holding on to it. So do you already offload all of your properties in Hamilton? We're planning on to, or?
No. I still got a couple more. I unloaded a few as we're recording this. We accepted an offer on one of the 3 units. And then even I had a student rental in Welland. I got rid of that last year. So slowly but surely unloading. And yeah, so, I mean, when the timing's right, we'll see how things go. Like one of my 3 units currently that I have in Hamilton, 2 out of the 3 were Airbnb, but now obviously the ticker's coming here as we record this of having, being allowed Airbnbs in Hamilton and having to fall under the new rules and bylaw is just something that I don't really want to play with. Even the midterm rentals, like, people are crushing midterms, and I'm not saying it's not a good model. It's just, I think they're cracking down more and more. And I think I can see that trend continuing. I think they need more housing, which is a no brainer. And then 2, they just want to, have a stranglehold on the market, I guess. So I just like what I see better south of the border, and the lending is better. Cash flow is better. It's just more people, more transactions, just like more.
Yeah.
So, and it is what it is, and that's not for everybody, and that's fine. So, but for me, that's what I like. I'm also a dual citizen, and eventually I want to move down there or have some opportunities that I can jump from state to state or whatever the case may be, and just have a little bit more of that freedom on my side with the Airbnbs.
Yeah. We will definitely go into the US side. Like Dave just went through a lot of the small details. We catch on a lot. He has a lot of competitive advantage because of his homework, because of his dual citizenship and all that. And this whole new market, but there's a lot of opportunity. I agree. We're looking at similar things. But before we go into that, when Hamilton come back with the Airbnb ban, yourself or other investor, how are they mitigating this situation? You kind of mentioned maybe go to midterm rental, long-term rental. How are they still making numbers work?
Numbers can depend on the property in the area, obviously, but the numbers can be very similar with short-term to midterm. If midterm was more available and as instant as like Airbnb can provide, I would consider holding and just doing midterm. But I feel like it's a little bit up and down. Like it's not as consistent. And maybe I'm a little naive to it, but I know some people that are running some great programs that can provide even midterm opportunities, people coming in and out. But to answer your question, how are people pivoting? It's, it's going from those short terms to midterm, which is basically 30-day plus stays versus, 1 night or 2 night or a week or whatever. And there's different areas that you can focus on. So there's corporate, people traveling for work. There's nurses, doctors, that whole field of people traveling, which isn't as prominent here as it is in the US. Like there's a lot more going on with, medical and traveling nurses, etc. But also up here, like the insurance companies, people have a fire, people have a flood, something happens, or just people in between homes, just need something temporarily. So there's lots of different markets out there that people can get into the midterm side of things that does get you past this bylaw currently in Hamilton, for example, that doesn't allow the short term.
Yeah. So basically it's people going to midterms and rentals or maybe long-term rentals, depending on who's your,
Yeah. And the other thing too is, fortunately, people who pivoting from say short term, some of the areas, and depending on what your mortgage is like and how cash flow runs in that property, people are just going back to long-term tenants because the rents have increased significantly over the last few years. So
yeah, that's there you have it. If any of you guys listeners, any of our listeners are struggling with that, getting Airbnb banned or think about short-term, midterm, here you have it. Midterm rental or long-term rental because the rent has increased so much. And kudos to you on figuring those stuff out, and you're slowly selling, slowly but surely selling.
Yeah, it hurts a little bit. I'm not going to lie. I mean, it's not the ideal time to be selling anything. However, if you can, if it works for you, or if you're pivoting into something that's going to create a higher ROI, then it is what it is. But, we all don't have a crystal ball and could have said, I'm going to sell all my stuff 18 months ago and, come out on top or the highest point ever, then obviously I would have done that. And a lot of people in the market would have, but I think no one could have foreseen how quickly they increased and how quickly it did change. Here anyway, I mean, everywhere really, but specifically here.
Yeah, I can definitely echo with that. I teach stock option. I'm a guest speaker for DD Bank. And here's what we've seen is that, there's 2008, there's 2018, there's 2020. If we always look back, if there's a good fundamental, I know we're getting very vague. We're like crystal ball. If there's a fundamental like Warren Buffett's been here for 50, 80 years. If the economy is growing, if the people are coming in, if the jobs are continuing to be created, guess what? These are all short-term things. And 5-10 years down the road, you wish you didn't sell again. But in that short term is whoever can hold on to it with the right cash flow and can stomach that missing out of the high point. But if you close your eyes, come back in 5 years, it might be much higher. Maybe it will double. People will be like, Cody, like, are you kidding me? This is on record. Yeah, maybe it'll double. Yeah, we're probably like Toronto's and surroundings turn into New York, right? So, I
think there's just a lot. There's a lot of learning that happened during this time. Like for the average I don't know how, your demographic who listens to this show.
High income earners. So people are doctors, accountants, lawyers. Hey, anywhere high income earners. I didn't classify anything about age, but they're all on their way to their financial freedom journey. So they try to increase their income. Now they have income, they try to save more and then use money to make money, right?
Yeah.
Save, keep, invest. Right.
Love it. And I don't know the age group of, obviously everyone here, but some people can relate to certain things differently. Like some people have only been investing for a few years. So this is just like, even the last 10 years, it's been a solid bull run for essentially 10 to 12 years. I mean, even for someone like me, who I bought my first property literally in 2008, a new build in Burlington for $270,000. Back
How
then,
much is
it was
that
like
now 1.2.
I think I looked and it's about, I think they're around the 700-ish, mark. So I mean, you're, however many
3.5x and
3.5
15 years.
So right. That's like almost 300-400%. It's just one of those things where it's been a real eye opener for me personally, and it's definitely changed my perspective on things. And I've had a few mentors over the time, and they always harped on cash flow. And, when I was flipping things, I liked the cash flow. Don't get me wrong, but I like getting that big chunk and then putting it somewhere. Big chunk and then putting it somewhere. Whereas when you're thinking about real estate as a hold strategy, a lot of people were just barely cash flowing over the last few years with record low interest rates or historic low interest rates. So now a lot of these people are feeling the pain where these interest rates have increased and your cash flow is just gone. And you literally have, you're floating the property. Well, that's not a good investment, right? So
I totally agree on that.
Yeah, I've always had a gradual progression as any investor, I would say, like even whether it be stocks or anything, you learn as you go, but you're always chasing something. And I've always had my mentors tell me chase cash flow. I've never had one, maybe it's just the people I interact with, but they never were the flippers. They were always the cash flow investors type. And I think this is just an evolution of that. At first it started with single family homes, and then that got squeezed out because of the cost. And then I went into personally student rentals, and student rentals are still great, but I was chasing cash flow. Right. And then I went into the multifamily conversion. So I would add units to the properties.
Yeah.
Why? Because I was chasing cash flow. And now that formula is getting dried up again.
Yeah.
Because of interest rates. Right. So, and not only just interest rates, the cost of entry plus these interest rates. Mm-hmm. It's not apples to apples, 5-6 years ago when the interest rates were, maybe around this time now, which is historic average. But now I guess we're at a point now where, Airbnb and short-term rentals and even midterm rentals is a great opportunity to increase that cash flow on these properties. So that's why I'm pivoting there.
Yeah. Thanks for sharing us your journey from single family to student rental to multifamily to now multifamily. Less than 4 units are getting squeezed out. So, okay, for the existing property, how can we get more cash flow? Short-term rental getting banned. Okay, midterm rental. How can we up our competition on that?
I think, and I think another one to add in there is, because you're asking how, is I think education is a big one. So if you just think that you can only put 20% down on everything, it's going to take a long time to save up. So, learning about creative financing, learning about vendor take back or seller financing, subject to wherever you are in the US, certain strategies work differently in different places, but that's an opportunity that, you can learn about, and get in with less capital as a form of, entry.
Yeah. It's going to be a win-win, right? One of the habits from the 7 highly effective people, the famous buck, and one is win-win. So if you learn how to creative financing, guess what? Sometimes the landlord did not know how much tax they need to pay. They might not need the money now. So, I want to stagger out the tax capital gain. And guess what? You can pay a small amount. You don't even have to get it from the bank. The landlord will be helping you with the down payment. And so, thanks for sharing that. And it's just touching on that point of the cash flow. Surprisingly or not surprisingly, we're seeing a lot of real estate investors coming to our stock option program. And that's why TD asked me to go back, because a lot of real estate investors are really struggling with cash flow. They have a lot of equity, but they don't know where to put it. They're not feeling safe to lend out private lending because they know a lot of people are over leveraged, and they just want that consistency, and they don't want to pick stocks. They know they're not Warren Buffett. So that's where our strategy kind of come in really well. So shamelessly plug it in. There's an upcoming webinar for a TD in May. You can find it anywhere. If you search for Cody on that, and then come, it's all free.
Nice.
That being said, I know you really want to talk about Airbnb in US and everything investing in US. Why not we start with how did that happen? And is there any failure story or aha moment that kind of make you realize that, oh my God, what am I doing? Why am I not doing this more? What's the aha moment?
I got into Airbnb, I'd say I feel like it's a little late. It's been around for obviously quite a while, and some friends around me were doing it, significantly earlier than I was. And it wasn't until, again, just trying to increase that cash flow in Hamilton, I was like, I'm going to jump on this Airbnb stuff. So, by the time we furnished everything, got everything done, well, about, I don't even know how many months later. And I know there was rumblings, but it was kind of back and forth of what was going to happen specifically in Hamilton. Well, what is it? 6 months later, they finally came out with something saying that they were going to most likely kind of squash Airbnbs for the most part, if you want to call it, what it is. So it was like, oh man, so a pain point. What was it? There's a lot of different areas that you could go, but it hurt furnishing 2 units and then realizing 6 months later or so that you're going to have some headwind here trying to continue doing Airbnbs in the city that you just are ready to, that you just furnished. So that's when a lot of people started pivoting to this midterm thing. So, midterm rentals, like I said. So moving forward, I'm approaching different areas and different markets that are already regulated. So I would never now enter into a market that isn't already regulated or already has the foundation already built. And speaking to a couple people who have been in this industry at a very high level, it's actually one of the first things that they look at. So now they're looking at what is the market, that you're interested in, but really what's the market that's already been regulated. And there's nothing wrong. We all can bitch and complain about regulation and red tape and everything, but if you're going to do some investing, obviously you want some borders, and you don't necessarily want to be investing in the Wild West, right? Mm-hmm. There's some great opportunities down in Mexico right now that's on my table that I'm really love, but at the same time, it's like, I'm just a little hesitant.
Is it worth it for that extra few percent, right?
Yeah. And also, it's a little more than that percent, but it's very, very good. But it's just one of those things where, just back to this example of, you already know what you're getting yourself into, right? They're like, it eliminates that unknown, right? And you're hedging your risk a little bit too, of knowing exactly what the borders, the rules are, and the parameters. It's like playing a sport. You're going to go in and just be, free for all and just try and play football with no rules, or do you want some rules on the field? Right. So I think moving forward, it's definitely that is finding locations that are already regulated to play within. So you don't have to pivot, 6 months or a year or even 2 years down the road. You want to find out exactly what's working now and the game that's going to be played moving forward. And then 2, just where the numbers work. So, some of these markets that we're looking, I can't even compete with stuff here in Ontario as far as cash flow is concerned. So that's why I'm bullish on certain markets, not all markets, and every zip code can be different than the one next door. So it's literally so specific of where we're focusing, of where the numbers work.
And what tools are you using to find those zip codes? I know you don't want to show those zip code. You can just show the cities or state, but what tools are you using to come up with those ones and find out whether they're already regulated or not?
Sure. So there's a lot of tools out there that you can use. There's everything from like Price Labs to AirDNA to, MatchVisor to literally consulting and people who run hedge funds that just focus on short-term rentals. Like, what are they doing? Where are they investing? What's working? What's their ROI look like? Like, we don't always have to reinvent the wheel, and everything's been done already. So just find the people that are successful in that field. So that's what I've done is, I've consulted, I've teamed up with certain people that have a number of properties in different areas and literally just ask them the questions, what's working and why, and if they're willing to share that with you or partner with you, essentially that's what we're doing moving forward. So we're finding out exactly what states are working, what markets, what zip codes, and the highest return on, cash on cash, and let's chase that cash flow.
Mm-hmm, mm-hmm. And how many property have you yourself done or with your partners have done in the US side?
Well, as far as JV, we're taking on joint venture partners. So we're actually partnering with people who want to go into the US, whether you're in Canada or the US currently. So, our target is over, 10 to 15% cash on cash. So that's like kind of like our formula and our number that we want to hit as a target, which, good luck trying to do that right now in Ontario. But it's one of those things where the people who I'm leaning on, they have $100 million funds. So it's one of those things where you're learning by their experience and you're kind of being shown what's working.
So how are you partnering with those people who have a big fund, and how you bring those value to the JV partners that potentially might partner with you?
Yeah. So basically they're just holding our hand. They're essentially going to point us in the right direction, and we find the market. So I'm the active partner in the sense of a JV. So I'll find the property, whether it be off market or on market. I support the joint venture partner in the funding, the structuring, like I said, the financing, the management, all the hands-on, so that it's simply a turnkey process for them.
Well, what's in it for the hedge fund manager sharing these information with you? What's in it for them? I know what's in it for investor. Well, I know what's in it for you, but what's in it for them?
So essentially they would get an equity piece in our deal.
Got it. Okay. That's very clear. Yeah. That's very clear.
Yeah.
Did you want to tell us a project you have done down in the US? Kind of share with us some numbers so people understand if they're coming as an investor, this is what they're looking at.
Yeah. So, as far as what we're doing now in Scottsdale, that was our first property across the border. So that was Scottsdale, was just south of Old Town. And for those of you who don't know, Old Town is essentially kind of like the entertainment district hub for Scottsdale. So we're just like about a 4-minute Uber ride south of there. So we're very, very close. So we're in a great location. Erin's my fiance, who also has a business, actually, for any of you out there. It's basically investors designing for investors. So they help people with short-term, mid-term, anyone doing construction and design for their investment properties or short-term rental properties. They'll actually, design from the first finding tiles to color to everything, all the way to furnishings, and in that specific market. So Pink Wall Designs is their name. You can check them out too, but they've helped out a lot as well. But we ended up purchasing this place down in Scottsdale for us. So it wasn't necessarily the highest and best use. So we wanted a place to go and enjoy with our family and that sort of thing. So we found a place that was close, that we know would do well, and especially the location, etc. So we found a place off market. We knocked it down. We rebuilt completely, added a pool, hot tub, the whole thing. It was 4-bedroom, 2-bath. It was originally just a 2-bedroom, 1-bath. So we had about 1,000 square feet on that. So it was quite like a large project. So that really got our feet wet, figured everything out, found out now that it's up and running, what we like, what we don't like, what we would change, and really going through the process is how you learn. Right. Mm-hmm. So knowing that this was our first project that we were going to enjoy and not so much be like, we're so obviously conscious of what we're putting into it, but we were dialed in of like, now what's the best use moving forward? Mm-hmm. So that's really where we've kind of dialed it in, and we're looking forward to continue to do similar stuff.
Yeah.
Sorry, go ahead.
What has not pivot? You guys have done one. What will you guys change if you guys move on the next one? Maybe that's why our listeners want to know, right?
Yeah. So moving forward. So what we did was we went from ground up. So the whole place is brand new. For your highest and best use, I would not do that moving forward. It worked for us, but moving forward, I would find, and this is a suggestion for anyone looking to do something similar, is find the square footage already. Moving forward, we'll find, bedroom size, the amount of bedrooms, bath, etc. Whether you got to add, stuff into it, like a new pool and hot tub, that could, and if the numbers work, that's fine. But I would think the highest and best use would be find something that already has a square footage, already has the bedroom size, and then add on top of that. And also just realizing how crucial and important the amenities are. In any Airbnb, it's not like Hamilton Airbnb where you just have a place that's new, modern, and clean, and people can rent it because they're just passing through for whatever reason. Like it's a completely different ball game down there. So that's been a great learning curve. And again, you're just constantly learning from people. So
what do you say is the top 3 amenities down in Scottsdale, where it's hot like desert in the summer? Like what is the top 3 amenities? You gotta have it.
Definitely pool, hot tub, lounging areas, putting green, possibly. If you start getting real elaborate, you can get, it depends on what you're marketing too, right? So multiple socializing areas out back, like the turf. You want the turf there. You want the like a fire pit, maybe a lounge chairs, loungers around the pool, that sort of thing. So that's the top 3 I would say though is maybe like putting green, pool, and hot tub. For sure.
Got it. There you have it. Cool. And I know you, with all these years of experience through single family to student housing to multifamily flipping down to the US. And I know you have a program that help out not just the first responder, but also help out anyone who's starting out. Does that program include anything about investing in US, whether that's accounting, whether that's financing, all that, or that's purely just for Canada?
No, it's for Canada and the US. So there's actually sections on there where, for example, we did, accounting, specifically our CPA. Well, I actually had a cross-border specialist come on and articulate and talk about if you're here or even if you're in the US. We talked about certain strategies that only work in the US and not in Canada. We had investors from Canada and the US come on. So it's definitely cross-border. We even talked about Airbnb, which at the end of the day, Airbnb is Airbnb. However, some of the financing portions of it and like creative financing and terminology can be a little bit different. But at the end of the day, it's all real estate. There's just some fine tuning in a few areas that could be confusing if you don't know, but we break it down on the course.
That's good. That's good. And as far as I know, I think Dave Knight really priced this course It's all recording, but it's real time recording. And he really priced his course as really helping the people out. And then he promised that before he got on this podcast, he's going to give us the best price for our listeners. And I can confirm that it's 50% off. And really, I think it's a no brainer. So where would you lead people to? I know we're going to put a link in the description, but tell us where you want people to go and find that.
Yeah, go check out 911wealthnetwork.com. And like I said, I'm a full-time first responder, and initially geared towards first responders, but this is for anybody. So, I mean, you will get benefit out of this if you're interested, but just go to 911wealthnetwork.com and you'll see a boot camp link on there. It's a real estate investing boot camp, which is really, at the end of the day, it's just taking all the fundamentals you need to know to either get started, grow, or scale. And it just jam-packed in literally a boot camp that I promise you, I put my heart into it. And I was super blessed, man. Like with my podcast for First Responders Wealth Network, I've been fortunate to interact with a lot of great people. And through that podcast, I've literally asked them to come back and share their education. So they literally are teaching in this course. So it's not just me on the whiteboard, which I do. And we analyze a bunch of stuff, and I walk you through step by step how to approach a property, how to analyze a property, how to get into your first property, or how to scale. What's a BRRRR? What does that refinance process look like? What's private money? What's hard money? What's creative financing? All that stuff is all in there. And I've been super blessed and fortunate to have people come on and share that education. So, yeah.
So if you want to get that wealth of knowledge, especially for a beginner starting out, trying to buy your first property with the first 5, there you have it. Something to consider. I think it will be worth your money. Again, I'm not sponsored by that. I just know the price, and we get a 50% off discount, right? What's the promo code that we need to use?
We got to make it up right here on the spot. What do you want to do?
Just put in YEH. That's my last name. Yay. And if they put in a yay, they get 50% off. Okay. Listeners, you guys have it here. If you put in YEH, you get 50% off.
All right. Okay. I'll get my my girl to get on that. YEH. I like it.
Yeah. YEH.
All right.
Awesome. So that being said, we're going to go into our fire round. We asked our guests a few questions. I have a few, especially for you as a podcast host. And I'll start with the first one.
Go. I wasn't warmed up or given softballs on these questions.
No, curveball.
Okay, always. All right. Go ahead. Curveball.
If you're a podcast host, who would you like to interview?
I am a podcast host. So who would I like to interview?
Yeah, if you only can interview 3 people right now, and you will be like, that's my last finale.
So are you asking 3 or 1 person?
You can give 1, but I'm pushing for 3 in case you can.
1. Is it Sam Zell? He's he's one of the top commercial guys. He's like top of the food chain. Sam Zell, I believe his name is.
How do you spell his last name? ZELL, right?
I think so. Yes.
Yeah, I found him. American businessman. Okay.
Oh yeah. He's like top of the food chain for commercial and multifamily.
81 years old, net worth 5.2 million. Okay.
No, he's got to be 5.2 million?
Billion. Sorry, billion.
Oh, yeah. Okay, yeah, that's him. I've just heard his name come up all the time. I love people with experience. I would want to interview the old guys, like the top dogs. So like him, Warren Buffett, that type of caliber of just knowledge and experience. I think and then also, who else would I do? I'm drawing a blank on the.
That's fine.
Oh my God.
Let's move on to the next question. 2 is good enough. Sam Zell is someone we haven't heard before. Warren Buffett. Yeah, I'd like to interview him. I was actually going to go to Omaha this May to bring all my students there, but it was too short notice. So we're going to do it next year.
Got it.
Next question is, if you become a billionaire tomorrow, what will your day look like?
Resign. The next day, I would hand in not my 2 weeks. I'd probably hand in my 30-second papers. What would my day like? I would love, man, to continue sharing and educating my first responder community. Just helping share education, financial awareness and literacy. And that's just not by Dave Knight doing that. I mean, I would find a way to really help my own community in becoming a little bit more financial aware and educated by bringing on people who are way ahead of me, whether that be paying them because I got a shitload of dough now, but I would be assisting them in some shape or form. So whether it be straight education or even a fund of some sort to invest into.
There you have it. And where can our audience find more about you?
Yeah, you can just go on Instagram to do Dave Nighther, so DAVEKNIGHTER, or just go to 911wealthnetwork.com and have my podcast on there and the education platform.
Awesome. Well, Dave, this has been a pleasure. We're going to have you come on in the future episode. This is not the end, but the beginning of helping out more first responder and just first-time investor. And there's a lot more interesting episodes coming up. So stay tuned and listen to the next one. Okay. Thanks, Dave.
Thanks for having me on, man.
All the links mentioned in this episode are included in the show notes. And if you love this episode, please leave us a rating and review on Apple iTunes. The link is also included in the show notes. And we would really appreciate your help in spreading the word to more high income earners on how they too can maximize both their time and money.
Also, if you still haven't joined our High Income Earners Facebook group, you are missing out on High Income Earners community where we help each other reach our own version of FIRE.